We all know that price is driven by the economic data and the institutions, the banks and the hedge funds. So, for you to trade the markets effectively and profitably is if you can be able to accurately read the economic data, interpret the institutional positions correctly, and also read price action correctly. These three things are the only thing you need for your trading career. What if I can tell you that I have managed to create a system that will combine all these three indicators to then come up with a scoring system that will tell us if we bullish, bearish, or ranging? If you want to learn that today, stay tuned and subscribe to the channel. Our approach assigns weight to three critical factors. Economic data contributes 50% of the score because it is more influential to how price moves. COT net positions account for 20%. Price action also holds 20%. Then price and COT momentum shift holds 10%. This method gives us a well-rounded view of market strength and weakness. Make sure to watch the previous video because some of the terms we're going to use here were defined from it. Here's a breakdown for it. Indicator calculations. Economic data score, 50%. Compare economic growth versus inflation to classify into reflation, Goldilocks, stagflation, or recession. Assign scores accordingly. Quatrock, 20%. Compute the rate of change for net positions over the last 6 weeks. Price ROC, 20%. Compute the rate of change for price over the last 6 weeks. COTMS, 5%. Measure the momentum shift by subtracting the current ROC from the ROC 6 weeks ago. Price MS, 5%. Measure the price momentum shift similarly. The score will range from -10 to 10, where 7 to 10 is very bullish, 3 to 6 bullish, -2 to 2 ranging, -3 to -6 bearish, and -7 to -10 very bearish. Now, let's use the US data to see this practically. The final market score for USD is -0.55, which falls in the ranging category, but slightly bearish. Economic data shows stagflation, negative for growth. Inflation is rising. I know that people might argue that we have not actually reached stagflation because the economic data is still mixed for now. For now, we can say we still between reflation and stagflation. But the correct word to use is that we at stagflation risk. But our system is not designed to read in-betweens. It has categorized this data to stagflation. COT positioning shows a bullish shift in sentiment. Price action is slightly bearish, but not strongly trending. Momentum shifts suggest mixed market signals. That is why the final market score for USD is -0.55. Now, because we know how the system works, let us look at how our system analyzed the whole Forex market. Japanese yen is the strongest with a reflationary environment, indicating a combination of increasing growth and inflation. CHF, Swiss franc, and GBP, British pound, also show strength, benefiting from a Goldilocks environment, growth without excessive inflation. EUR, USD, AUD, CAD, and NZD are weaker due to recessionary or stagflation conditions. All currencies remain in the ranging category, -2 to +2, meaning no strong trend is established. But the beauty of our scoring system has already told us currencies that are showing strength, which is JPY, Japanese yen, is the strongest with a reflationary environment, indicating a combination of increasing growth and inflation. CHF, Swiss franc, and GBP, British pound, also show strength, benefiting from a Goldilocks environment, growth without excessive inflation. So, pairing these currencies against the weaker ones, you will get better opportunities. Since I trade USD pairs, I'll be looking to short USD JPY, USD CHF, and buy GBP/USD. Now let's look at other assets classes we can trade. Gold is the strongest, plus 3.92, bullish because it benefits from stagflation, high inflation, slower growth. NASDAQ and S&P 500 remain neutral because tech stocks have some inverse USD correlation, but economic concerns keep them subdued. Crude oil, US oil, is the weakest asset minus 2.05, ranging bearish as high inflation and stagflation usually hurt oil demand, while a strong USD pressures commodity prices. So in this table, I will be looking for gold buys and crude oil shorts. NASDAQ and S&P 500 remain neutral, and I will be also neutral on them. I hope you found this video insightful. Next time, after doing the analysis on the scoring system, we will then go to the charts to make our technical analysis. Don't forget to like, share, and subscribe to the video. That will motivate me to keep making these free videos for you. Thank you for watching. Bye.